After more than a year, I finally added a new stock to my portfolio. It is a fintech company headquartered in Uruguay, but with a worldwide business. It is dLocal, a company listed on the Nasdaq, so it is easily tradable. So what does dLocal do? It connects big merchants with local payment systems. For example, and this is something that affects me personally, I live in Mauritius, a country with most people not having access to a credit card. So it's harder for these people to make online purchases. And there are countries where it gets worse, where people don't even use banks that much. But all of these people today, they have a smartphone and they use some sort of payment system. For example, in Kenya, they have something called M-Pesa. But let's say someone in Kenya wants to pay for Netflix, but they don't have a credit card. So, but Netflix itself or Amazon or Google, these big companies, they are not going to provide a payment system just for this country. This is where dLocal has its business. They are going to make the connection. They have the contract with the big merchants, and then they are going to open an office in Kenya, connect with the local payment system. So people using M-Pesa in Kenya, they are able to make purchases on Amazon. They are able to pay for Netflix, pay for Facebook, for all of these big merchants. In a way, it is similar to what Adyen or Stripe do. The difference is that Stripe, Adyen, they are not going to go into local markets, small markets. For example, I cannot use Stripe in Mauritius. And I cannot use dLocal too. And that's a good thing. It means that even though they are entering many countries, there are more countries for them to enter, more people to use their infrastructure in the background. When you're making the payment, you don't even know what is happening. It is like using Wise platform. You're just transferring money. It is being done in the background on the Wise platform. You as the user, you're just getting the service without knowing what is happening. This is the best of companies, according to me, because things are happening in the background. So there is no need to handle users. There is no need to handle other complicated regulations. You just have to handle the rails. The biggest market for dLocal today is Brazil, followed by Argentina, but they have also entered some African, some Asian countries. And as I told you, there are more countries for them to enter. There are many ways that this company can grow. By entering new countries, of course, which means they will have access to more people, more payment systems, more payment services, by having deals with more merchants. And this is a sort of mode, because if Meta has already partnered with dLocal to provide their services in Argentina, they don't have to go and look for another fintech company to partner with. They already have one. And once they have partnered with Meta in Argentina, they can extend this to other countries. Of course, it's not that simple, but once you have a deal with someone and everything is going on well, they would want to keep partnering with you to expand their market reach. Another way that this company can grow is more people in the countries they are in using the internet. And we know that in these developing emerging countries, there is a young population who are going to spend more money, who are going to make more money. So this is another way that this company can grow. The one person making the purchase, now they're making more purchases, which means higher volume. So if all is so well, why is the stock underperforming? Actually, if you look at TPV, total payment volume, it has been growing by over 50% a year. Even revenues have been growing at rapid rates, and even net income, even profits. So why the stock down? We have to understand a few things that the market doesn't really like about this company. First of all, there have been a short reports a couple of years ago. One of the things that the short reports talk about was that the float is so low. About 50% of the company is owned by insiders. According to me, this is not a bad thing. This is a good thing. This is good for the shareholders, the public shareholders, if you're going to buy the stock on the Nasdaq. The float being so low has allowed those short sellers to short sell the stock, and it means that the stock price went down. But it can also mean that we have a short squeeze, which I'm not saying anything about that right now, but it is a possibility that we need to consider with so much of the float being short. Another issue that short sellers saw with this company was that the numbers changed. When they had their IPO, their registration, and then their first annual report, the numbers were not the same. what happened was that the way the company recorded the numbers, this is what changed. I talk about all of it on the Super Investors Club. If you're interested, you can find the full analysis of dLocal, all the companies I'm analyzing, all the companies I'm following. You can find everything there, along with an investing course for beginners, other investing courses I'm working on. If you're interested, please have a look. This is the best way you can help this channel. The short sellers also had a list of all other issues they saw with dLocal. But so how did dLocal respond to these short sellers? They hired some forensic accountant, one of the big 4 firms, which did a big thorough audit of the whole company, all the numbers and everything, and they did not see anything wrong. So I don't know, maybe they are wrong, they made a mistake, but if they have done such a big work and they don't see anything wrong, their own auditors doing the same audit, they don't see anything wrong, the probability of something being wrong is low. Of course, we never know. It can happen to any company. Maybe Apple is forging their numbers, who knows? When I think about this, I'm not so worried. I have seen worse things. There is a famous person, a famous company who wanted to take his company private, funding secured. If nobody saw anything wrong with that, so dLocal is doing much better. Another good way that the company responded to the short sellers was to bring on a new CEO, and that's Pedro On, who has been the CFO of Mercado Libre for 12 years. So I don't think anyone who has been the CFO of the largest tech company in Latin America would leave his job to go and do some fraud. I'm sure he has done his due diligence before joining this company. Another issue that the market sees with dLocal is that the take rate is going down. And this is normal for any fintech. Even with Wise, as they are growing, the take rate is going to go down. They are growing on volume, and if they want to remain competitive, then the take rate should be going down. It is something we expect. But the take rate is bigger compared to Adyen, compared to Stripe, compared to PayPal. This is also an advantage to them, which means that smaller companies cannot come and compete with them because they will be charging more. If you're just starting, you would have to charge more. Only over time, when the volume increases, then the take rate goes down. What about the risk of this company? I know many people are scared of investing in emerging markets. I don't like investing in emerging markets because I don't know the risk. I invest in a company, there is a coup, there is a new dictatorship, they nationalize everything, I lose everything. I invested in Russia, I lost everything because of the war. So I refrain, so I don't like investing in emerging markets. But this company, it is diversified across different countries. There were regulatory issues, for example, in Nigeria a few years ago, and you will see that now they don't make much money at all from Nigeria. This year, there were issues in Argentina with the evaluation of the currency. So they lost money in Argentina, but they made money in other countries. There's always going to be something happening in an emerging country. There's going to be currency devaluation, a war, something will happen. But if you're diversified across dozens of countries, with millions of people, having the possibility of reaching billions of people, the risk is limited. Of course, they'll be concentrated more in some countries. This is a risk you have to take as an investor in this company, which I'm not so worried about. It's not a company that we can expect earnings will grow smoothly. Earnings will always be volatile, but over time, I believe earnings will grow, and with it, the intrinsic value of the company. And speaking about earnings, we have to be careful what is the owner's earnings of this company, because they handle cash, they get some interest from the cash they're holding for their merchants. So if interest rate changes, how much money they make also changes. But because they're holding cash, which sometimes they use to buy debt, that's what happened in Argentina. If there's a currency devaluation, the bonds that they own is going to be devalued. But that's only on paper. It doesn't affect the cash flow at all, but it affects the net income. So you have to be careful what is the owner's earnings of this company. And I have talked about all of this on the Super Investors Club in my full analysis. To conclude, this is a company that requires little capital to grow. It reminds me a lot of Wise, but unlike Wise, it is a little riskier, I will say. That doesn't mean that I will not invest in the company. It is at a wonderful price. I wish the stock price would go further down so that I can buy more. Of course, it's never going to be 22% of my portfolio like Wise. And to know why I love Wise so much, I would recommend you watch this video next. Have a nice day and goodbye.